Welcome back to the channel. What we just witnessed marks a critical turning point for SMX, and it's a moment that perfectly captures the tension between market expectation and underlying reality. For most of late 2025, the dominant expectation was grim. Investors believed the massive debt overhang would eventually trigger a terminal liquidity event. Many assumed dilution, delisting, or worse. Instead, the reality turned out very differently. SMX has now successfully converted more than $20 million of debt into equity, significantly cleaning up its balance sheet at a crucial time. This single move removed the largest piece of the bearish thesis that had been weighing on the stock. For traders tracking SMX on platforms like Robinhood, Fidelity, SoFi, or Interactive Brokers, this creates a fascinating setup. On one hand, the balance sheet has materially improved. On the other, the fear of future dilution still lingers. Historically, when a stock has gone through multiple splits, SMX has had 7, it's often a sign of distress. But heading into 2026, SMX is attempting something rare, flipping the narrative from survival to scale. The company is transitioning from a speculative tech story into what could become infrastructure for the verification economy. And in small-cap tech, this exact pivot is where the difference between a zero and a multi-bagger is often decided. A major curiosity driver right now is SMX's new treasury strategy. The company recently announced the opening of a corporate account with the Kraken exchange. This is not just a generic crypto move. It's a calculated step to integrate the plastic cycle token into a liquid trading environment. While many investors still label SMX as just another ESG play, the reality is much more complex. They are building a physical-to-digital bridge with real enforcement power. By embedding molecular markers into materials like plastic, rubber, and gold, SMX enables products to carry their own proof of origin. This replaces the outdated, paper-based trust me systems that global trade has relied on for decades. For self-directed investors screening for growth opportunities, SMX represents a classic expectation versus reality disconnect. The expectation, driven by a 99% price collapse in 2025, is that this is a failed SPAC story. The reality is that SMX technology is now being deployed inside real supply chains. One recent expansion includes latex and rubber gloves, an industry under intense regulatory pressure to prove ethical sourcing. On your Fidelity app, you may still see strong sell technical ratings based on historical price action, but volume tells a different story. Over 1.2 million shares traded recently, signaling that institutional eyes may be revisiting this $110 million market cap with a fresh perspective. We've also seen extreme price sensitivity to news, with recent moves from the high teens into the $40 range earlier this month. Despite after-hours dips, prices have been holding firm, suggesting consolidation rather than collapse. For investors managing individual brokerage accounts, the most important metric isn't short-term price, it's proof of origin contracts. SMX has moved beyond pilot programs and into live environments, working with partners like Bougainville Refinery for gold and major textile players in denim. Gold is a perfect example of expectation versus reality. Investors assume gold is already secure, but SMX has highlighted how vulnerable the global gold market still is to fraud and conflict metals. Through its True Gold subsidiary, SMX is giving each gram of gold a permanent, unalterable identity. That's not just a service, it's the foundation of a new industry standard. Institutional ownership remains small but notable. Funds such as Abry Advisors and L1 Capital have maintained positions even after the brutal 2025 drawdown. That persistence suggests long-term conviction, not short-term trading. From a business model perspective, SMX operates on 3 pillars: the chemical marker, the reader, and the blockchain ledger. Revenue comes from marker sales and recurring fees tied to digital material passports. It's a high-margin model at scale, but they're not there yet. Cash burn remains a reality. The positive takeaway is that SMX is funded through Q1 2026, giving them a window to prove revenue growth. The plastic cycle token could be a major catalyst, especially as new EU regulations mandate